Thank you all very much for joining us today. My name is Eleni Polokrignadou, and I'm the co-founder of Sintali. Sintali is an environmental verification body, and we are a global certification partner to IFC to deliver EDGE Green Building Certification. Some housekeeping notes before we start our webinar. This webinar will be recorded and will be available in the next couple of days, so you can always come back and hear the content again. We will be taking Q&A throughout the webinar, so please feel free to use the Q&A functionality at the bottom. Submit as many questions as you want, as specific as you want. We really want to get your feedback, really hear some of the challenges that you're facing on the ground, some of the questions that you have. We have an incredible panel today of experts who hopefully can really share their insights and help answer this very, very large question about how do we get more financing into green investment and green infrastructure in Africa. So I'd like to start by first introducing this wonderful panel. I'm joined today by Bunmi Otoki, the Head of Loan Solutions and Syndications for the Bank of Africa. Bunmi will share insights from the lender perspective. He has over 30 years of experience in banking and accounting, so he really has deep and good insight on the topic. I'm also joined by Lena Osman, the Head of Sustainable Finance for EMEA at Standard Chartered Bank. Lena is responsible for Standard Chartered's sustainable finance business across all the different products the bank offers, and is leading a charge for sustainable finance in Africa, Middle East, Europe, and the Americas. I'm also joined by Elizabeth Wangeshi Chege, sorry Elizabeth, the Chair of the Africa Regional Network of the World Green Building Council. Aside from her role in pioneering green buildings globally at the World Green Building Council, Elizabeth is also the CEO and co-founder of Web Limited, a sustainable development consultancy. Elizabeth will give valuable insights into green building and how this is vital for decarbonisation. And finally, I'm joined by Godfrey Tapella, the Senior Investment Officer for the real estate sector at IFC, responsible for investments in the commercial property space, including affordable housing, retail, and tourism across the sub-Saharan Africa. And he has direct experience in financing the built environment as well. So we'd like to start today's discussion with some short introductory comments from Elizabeth, who will set the scene on what's happening on the ground in Africa. We'll then move into a panel discussion with our distinguished panelists, and of course, we'll be taking questions throughout. So again, please use the Q&A functionality. Give us all the questions that you have. We're here to answer them and really have, hopefully, an engaging and lively conversation. Africa represents 16% of the global population, with the working population alone expected to grow 70% by 2035. The continent also collectively loses between 5 and 15% of gross domestic product to climate change annually. These statistics tell us that there's a really big opportunity to invest in green infrastructure, not only for increasing economic prosperity, but also for climate resilience. And yet there's a huge gap. It's estimated that there's a finance gap of more than $100 billion every year in Africa. And it's also estimated that African countries need $1.6 trillion of investment between 2022 and 2030 to take the climate action needed to meet the Paris Agreement. Which brings us today, here and now, where we're going to try and answer some of these questions as to why there's a large infrastructure gap in the region and what we can do to change that. So let's pass the floor over to Elizabeth. Elizabeth, as the chair of Africa in the World Green Building Council, means she's exposed to a lot of the challenges and has really been on the ground in her professional role as well as a consultant, and really can tell us what's going on and what it's like for developers and companies in the green infrastructure space and how easy or difficult it is to get started. Elizabeth, over to you.
Thank you very much. And first of all, thank you for hosting this discussion. It's quite apt and comes at the right time as well. So first of all, I'd like to actually define what a green building or the green assets are. And using the World Green Building Council definition, a green building is a building or built environment, as we're talking about infrastructure as well, that in its design, construction, or operation reduces or eliminates negative impacts and can create positive impacts on our climate and natural environment. So I just wanted to bring that in very early on. There's various benefits on building green, and some of them, especially in decarbonization, we look at efficient use of energy. But when we talk about use of energy, we first of all have to reduce the energy that we need, so designing to the climate. You know, one of the main things now, especially that Europe is going into winter Africa, the weather in Africa is fantastic for using passive design principles, but then we forget to use the passive design principles. So we lock in carbon at an early stage, our buildings become inefficient, and also they're not resilient to climate change. I'd also like to point out where we currently are as Africa. 37% of global energy-related emissions come from buildings. 36% of global energy demand is from buildings, and the materials consumption, especially when we're talking about decarbonization, we have to also consider how the materials are actually manufactured, where they're manufactured, because they use energy to get from point A to B as well. So 50% materials consumption. Yet, when you look at our building codes in the countries around Africa, 66% of the countries lack mandatory building codes. So even as we speak, a lot of the banks have, I would directly say they already have some stranded assets because they're not green, they're not resilient. And the conversation about global north, global south, that global south, yes, we're going to build 80% of the cities that will exist in 2050 are yet to be built. We have a great opportunity to build right from the beginning. But at the same time, we need to go back and refurbish. So I hope today when we talk about finance, we're talking about finance for existing buildings and refurbishment, as well as opportunity with new buildings and the built environment. So I'm in Kenya, and Kenya has a deficit of residential buildings. And I think 2 years ago, it was around 2 million, but World Bank actually says it's 200,000 a year that Kenya needs residential houses. Our new government actually says they're going to build 250,000 low-cost housing every year. So a great opportunity for an industry that needs to do things right. You did mention about the $1.6 trillion, so I won't go back to that. But one thing I'll say is that Africa only receives 3% of global climate finance into the continent. The continent that, if you look at the landmass size, you can fit USA, you can fit India, you can fit Europe in this landmass, including China. So the opportunity is that we have a great line in the sand for us to hit that 1.5-degree mark by building right in Africa. And maybe that's where we'll find the solutions. We need to find innovative financial solutions, especially around formal and informal as well. So in a lot of the aspects, the developers and the financial institutions are using business as usual markers that don't really incentivize green. It's not inherent in how the industry is currently working. Yet we have some low-hanging fruit when we talk about decarbonization. I mentioned energy efficiency. And part of my role at Sustainable Energy for All is that we look at energy efficiency first. So we don't have to be extremely technical. We come back to say energy efficiency can be done today. It's quick, it's local, whether you're in a rural area or whether you're in a city, it's ready. There's policy and technology solutions as well. But we also have to look at the opportunities around creating an enabling environment with financial institutions. For example, EBRD has a web-based tool for green technologies. It's fantastic. You look at the technologies there, they're incentivized financially. So if you use those in your buildings, you tick the box already. For example, Kenya Green Building Society put a materials directory together, green building materials directory together. And this was also to enable the market so that people know where to source this green building materials. Energy efficiency is the least cost opportunity of decarbonization. Yet we forget that and quickly move on to renewable energy. Yes, it's good, but we have to have energy efficiency first. I'd like to also point out a study done by FC, and maybe Godfrey will speak to it as well, that EDGE certification, the study revealed that 22 green buildings covering around 380,000 meters square save at least $5 million annually on electricity bills, let alone the carbon that is saved as well. And this is just from a basis of saying EDGE requires that you certified EDGE buildings, you need to meet 20% reduction in energy, 20% reduction in materials, embodied carbon in that, and water. So we have the technologies, we have green building councils across Africa. We have 17 members for the World Green Building Council. And at the moment, we cover a population of 700 million people, and that's growing because we have more green building councils coming online. There's various collaborations and partnerships as well that also help to provide this support. And this is the support we also bring to developers when they come and ask to say, I've received some funding, it says I have to build green. What is a green building? So we support in that. So even green building is a service, but at the same time, we have others that we have to train. And also training is not just for developers, it's also for the financial institutions, especially on the de-risking facilities, because green buildings are being treated the same way as other buildings. And hence we've seen this slow growth and uptake as well. I'll stop there for now, but thank you very much.
I think you've set the scene very nicely and powerfully for the private sector banks to now come in and tell us what's going on from the banking side. I mean, I think everything that Elizabeth said really rings true in terms of the opportunity, in terms of the appetite, in terms of the scale of what we need to look at and really what we have ahead of us to meet the Paris Agreement. So let's take it to the private sector banks and hear from the financing side, how has it gone in terms of financing within the African continent? And if there are barriers, what are the barriers in terms of getting the money to help get these projects built on the ground? Maybe I can start with Bunmi and then we can go to Lena.
Okay, thank you very much, Eleni. And welcome. Thanks for inviting me to this. I really appreciate it. And hello to my wonderful panelists. Elizabeth, you really hit the nail on the coffin there, if I may use that analogy, because the main issue that we have is basically what you alluded to, which was the first thing is the regulatory environment. That is very difficult for banks to provide financing when the regulatory environment itself is not mature in most of these African countries. That is the biggest issue that we have. The second issue, which you actually alluded to, was the fact that there's education. Both parties need to be educated, including myself, not just the developers. Some developers are actually more advanced than us bankers, but we also need to understand what actually works and how we can make this work better. But which I think my colleagues at the other banks, except if they have local branches, which we also have local branches, but I sit in London and I finance only in hard currency, meaning in FX. It's very difficult for us to finance a local party, a developer that's got a residential, 3,000 units for residential property in Africa to just individuals. That's very difficult because your source of repayment is going to be in the local currency. And take the example of, pardon my openness, take the example of Nigeria or Ghana as they stand right now, where the there's an FX issue for most counterparties. Even if the borrower is doing very well, the developer, it doesn't necessarily mean they can actually pay you back in the currency that you've provided to them. That is something that we would hope the IFC, the World Bank can come in and assist the international banks, the commercial banks, on this, either as a way of guarantee or as a way of swap, because otherwise it becomes very difficult. Of course, having said that, Bank of Africa is in about 20 or so African countries, and I think Stanchart and ABSA and in as many, if not more. We can do it on a local basis, but as you and I both know, the local balance sheets, the balance sheets of the local subsidies are much smaller than those of the internationals. Hence the reason why you always find London, Dubai, or whatever being the one booking these transactions. That is where the three key issues are for banks that we have faced so far. And that's why we haven't booked so many of it in hard currency. We've done some in local currency, but those, even then, you might want to, it's arguable if those qualify or not.
And I think that's an interesting point in terms of, we talk about getting money into Africa. And so this route in and the ability for the international climate finance to be able to come in is key. And so something like an exchange rate issue might not sound huge, but it actually is pretty significant in terms of being able to get these capital flows in. Lena, I'm curious from your side, from Standard Chartered, do you have similar challenges or have you found different obstacles in terms of being able to finance projects across the continent?
So I think it's pretty consistent with Bunmi's comments. I think I would add a couple of things maybe to that, to just expand on it a little bit. I think, you know, looking at the commercial viability of some of these projects is really important. Some of these projects, I mean, the risks of them differ according to their asset class. So whether it's a commercial property, it's a residential property, or otherwise, you know, every type of asset class will have its own kind of nuances that we need to kind of address and provide a mitigating structure around in order to put facilities in place. So, for example, things like the quality of contracts that would be in place, and that kind of also touches on the regulatory or the legal aspect of a transaction. Having the right contracts in place that are properly ring fenced, that protect the lenders or the or the investors even as well, not just from a financing perspective looking at debt, but also looking at equity, is also really important. What's also important is another challenge that we face is the cost of that debt or the cost of that equity, which you find to be higher. So while you could potentially find the appetite for some projects by creating the right structures around it, the really tricky part is actually making these commercially viable from a financing perspective as well. So you want to make sure that you're bringing a borrower, the right transaction with the right cost of borrowing as well. The other point that I would raise is on the having the right infrastructure in place around these projects, and that also kind of adds to the commercial viability. So, you know, where their location is, how they are connected, and all of these things. But that also, you know, ties back to the asset class and what the asset class would be. And the final point I want to bring up is on how green certifications could play a role in attracting more capital towards some of these projects, because we see a lot of capital now looking for these types of green investments that they could make, and the real estate environment is not it's definitely part of that structure, and therefore getting the right certifications in place, ensuring that those certifications are properly verified. There is a process behind it, and from someone who is credible in the market is really important, because that's what lenders like us, for example, are looking for. Lastly, maybe just one point to kind of mention here. I think there is a lot that we can do. I think we've been looking quite a lot at the traditional ways of providing financing to different places in the world, but looking at a one-size-fits-all sometimes. But I think that we should look at specifically certain tailor-made structures, innovative solutions that we can bring together, whether it is through the sustainable finance route, but also the different types of products that you can bring in, and the different permutations that you can bring into products that kind of suit both investors, so especially where you are helping a client raise financing through a private placement or the debt capital markets. I think there is a lot that we can do in terms of thinking around these structures, and there is a lot of conversation happening around how do we ensure that we don't just provide a one-size-fits-all type of solution for the continent.
I think that's a really interesting statement in terms of trying to find something that works more, because obviously these challenges are pretty big, and something like changing the regulatory environment across so many different countries, such a diverse continent, is obviously not going to happen overnight. So what are the intermediate solutions to be able to get at least some money going into countries to help stimulate some of this change, and then ultimately move towards a more investor-friendly environment, so to speak. I think this kind of ties very naturally now to pick on Godfrey from the Multilateral Development Bank side. So obviously, as a multilateral development bank, IFC has a different risk profile. You can look at different structures, and you can look at how you partner with commercial banks to try and really stimulate a market. So curious, from your experience working in East Africa, and from the IFC perspective, what the investment landscape does look like for you, where you see the opportunities and where you see the challenges.
Thank you, Lenny. Quite glad to be part of this panel. I think, I mean, a lot of what, we come across has been said, by my colleagues up front. And I think Elizabeth did set the tone and gave context in terms of, the landscape. I think from an opportunity perspective, I mean, the opportunities are enormous, but I mean, it is the supply of resources or funding resources that is obviously finite. And when you look at Africa, I mean, a large pockets of it still have a journey to go in terms of development, and which is where investments come into place in terms of building the necessary infrastructure, be it housing, be it hotels, be it warehousing. So the need is enormous, but the approach to it is really is where do you start? Where do you have the most impact or demonstrative impact? Because I mean, IFC as a development institution, we obviously work on commercial terms, but there are other aspects that we look at very closely in terms of development impact. And also, I think, leading the way in terms of, mainstreaming some of these initiatives. I think if you look at, green buildings initiatives, I mean, IFC came up with, the design, the EDGE tool, which has been or is in the process of being mainstreamed globally. I think working through a lot of partners, Elizabeth, when she was with the Kenya Green Building Society, and where she is now, I think she's even has much more reach and comes across, IFC engagements through various green building councils, by the way. So I think for us, I mean, the challenges that we face is really maybe more of educating the market or the partners in terms of possibly the beneficiaries of funding support that.
I think that's, I mean, education continues, I think, to be the ultimate stream of that underlies everything. And we got a question in from the audience just saying that, people are more patient in terms of investing in renewable energy in terms of the outcomes versus green buildings. And one could argue that that's primarily an issue of perception in terms of how quickly returns can happen and kind of what the perception of the value of green buildings is. But I'm curious, maybe from all of you, and I'll open this up, is, where does the education come from? And who needs to be doing this education? Because in a lot of cases, at least from what we see working globally, the banks, for example, have a really unique role to educate their clients because clients tend to listen to their banks. And so there's actually a really interesting opportunity there from an education perspective. Elizabeth does tons of education from the side of the community, of the practitioners, etc. But curious to see from the panel kind of where you think the biggest opportunity is on the education to be able to help drive this forward. Anyone can jump in.
I'm happy to come in here, Eleni. Actually, I think we do have a big role. We have a responsibility as well to kind of share these learnings that we have been building up over time with our clients. As a matter of fact, one thing that we have done actually in Standard Chartered is that we have put together an ESG advisory team whose role is actually to speak to clients about, what are the reportings and disclosures that are important to them, what are the kind of the benchmarking that they need to do, the gap analysis of their KPIs and what others are doing in their industries. Hopefully we can find sometimes some peers that are within the same geographical jurisdictions, for example. Sometimes it's a little bit more difficult, but we do spend a lot of time on that. We actually spend quite a lot of time with a lot of our clients in developing teach-ins and workshops around, what is sustainable finance? What do we look for as an international bank? How is it relevant to them? And what can they do to attract even more, specifically international capital into their capital structure? But that's just kind of one of the many things that we've been doing from a learning perspective, and we're seeing quite a lot of uptake in that learning, and a lot of like willingness to kind of learn more and implement.
If I may add to that, there's the level of education that we need to have for the professional people who are involved in finance and the built environment and other sectors as well. There's also the education around the users of the building. So that's talking about the whole value chain. But one thing we've seen as well is the curriculum in schools. We have to go back to basics. Kids leave school, then have to go and do more learning because they can't apply what they're learning in school to a world where there's climate change and these issues we're trying to address. So there's two parts, and financial institutions have a great opportunity to actually also work with governments, national and local governments, to mainstream a lot of this training, so that we're not doing the same training in 5-10 years because those kids have finished school. So yes, we can deal with the cohort of the professionals now, but at the same time, look at the younger ones who are coming through. And there's a big difference around curriculum and addressing sustainability and climate change as well. But it is a great opportunity.
Absolutely. And it's a whole system approach, right? We can't solve a challenge that has existed for decades overnight. And so there's definitely a lot of opportunity for every stakeholder to get involved. Shifting topics a little bit. So we talked about it a little in the previous question around residential and commercial, but curious to pick everyone's brain about the difference in terms of the bankability of projects and residential versus commercial. There's definitely, I think Elizabeth pointed out, there's massive housing needs across many different countries around Africa. Elizabeth mentioned Kenya. There's student housing crises across South Africa and other different regions. So there's definitely a need for both commercial and residential developments. From a banking perspective, is there a different profile that you're looking at when you're evaluating opportunities in commercial and residential? And if yes, what are the different areas, or what makes a project more bankable and more kind of able to meet some of the criteria that we talked about earlier? Maybe I'll start with Bunmi, and then I'll move across to the rest of our bankers on the call.
Okay, thanks. Actually, for us, when we look at this, residential, most people might want to back away from residential properties, but actually, when structured properly, like something we saw in Kenya, unfortunately, we were not able to do it, was that the teachers, but the reason residential, I'll start with the risk of residential. The reason residentials tend to be a bit riskier is because you've got, let's say, the mortgage payments coming from various individuals in a pool that then pays off the facility. But what you can do, as we saw with the teachers union in Kenya, is that it comes directly from the paycheck from their paycheck, and it goes into the SPV's account, whereby the lenders are then paid in a waterfall system. That also works very well. So for us, it's not a matter of whether I have a preference for residential or commercial. It's more the structure behind it, where the lender's exit will come from. Because sometimes you might have a bias with commercial, thinking, okay, we're lending, the tenants are going to be well-known names, but that is not as strong as sometimes if you have someone, the government employees, where the government employees, they're having the funds taken directly from the paycheck, the repayment. So that's where I would say we don't have a strong preference, but it's just a matter of where the exit comes from. That's the main thing for us. But as I said before, then again, this also gets back into the old issue of the FX, where then it becomes, well, if I'm being paid in Kenyan shillings, if the dollar goes through the roof, as we see right now, how are you going to convert the shillings to pay me back, or the Nigerian naira? That becomes sort of an issue. I can give you an example. We actually did a transaction in Nigeria, not for it's for renewable energy. It was actually an IMF World Bank backed program, but they were paying, I think, $600 per connection. But this $600 was being paid in Naira. So now what does the developer, the borrower, have to do? The borrower has to hedge himself because we have lent in dollars, but his revenues, the grant is going to come in Naira. This is the kind of stuff we're trying to see how we can hedge or properly structure this kind of transactions such that the banks are not exposed to the FX. And for instance, right now, Nigeria's FX situation is actually quite serious. So therefore, you see the issues that we have. So for us, it's a matter of structure that matters, not so much residential or commercial. But I'm keen to hear what my distinguished colleagues have on the panels have on this subject matter too. We might be missing something here.
It's really interesting to hear the different layers of kind of the level one, which is that project level, and does the project have the right credentials, or does it have the right structuring to make sense as a revenue stream? But then that top layer, which is really outside of the control of the people on the ground, right? In terms of the being able to funnel the money in and out, and kind of everybody trying to protect themselves, which makes sense. But yeah, Lena, maybe similar challenges or different challenges?
Similar challenges. I think the main difference, I guess, between a commercial and a residential structure is that in a commercial structure, you often have a contract in place where you have an off-taker, where you have someone paying the rent essentially based on a contract over a long period of time, and your risk shifts a little bit to the entity that's renting that property, typically. With residential, it's more dispersed, it's more fragmented, and you have all of these different kind of units that are paying into an account. So kind of thinking about how we can solve for some of these challenges. I mean, one way would be to kind of lend to the local or regional, either development banks or regional multilaterals, for instance, who know these markets a lot better in terms of, especially for the residential side of things, where they know these markets really well. And can take these kinds of risks, for example, especially on the FX risk and otherwise. But these are the kind of the main challenges that we see, which are very similar to what Bunmi has mentioned. Another angle that I would just kind of bring in selfishly from a sustainable finance side of things is how we look at it from a green versus social angle. So commercial properties typically could be looked at from a green perspective because they can get the right certifications in place by following certain criteria. But then from a residential perspective, I think it's really important that we focus on the affordability concept of these. And that's why the social side of things could play a role here, in addition to green. But I think the social role would be much more, probably much more prominent in this case. So it's really also important to kind of highlight these social benefits when borrowers are looking to kind of tap into lenders and tap into different pockets of liquidity, even equity as well. And I keep saying that because we are seeing a lot of funds specifically looking at how they can improve the access to affordable housing, for example, in addition to other types of infrastructure, but specifically affordable housing, housing for students, for the elderly, and even just generally affordable housing as well is really important, especially in different communities where you're not in a main city, for example.
Absolutely. Elizabeth, I'm going to pass to you because I know you've done and looked at various projects in this arena. Maybe you can share some examples of what you've seen that's worked and kind of exactly that intersection of not just environmental and not just getting commercial viability, but also the social impact.
I think one of the things that when we're looking at green buildings, there's various aspects that go into green buildings, and the social aspect is right at the center of it because people are at the center of this construction. So the social aspect as well, like for example, we have a decree in Kenya that was passed in 2020, especially for affordable housing. And this decree was that all affordable housing must meet the minimum standards of EDGE. And the reason for that was to actually close the gap between the building codes that are being revised or not available, versus what we need to do now, and tools that are available online for free, like the self-assessment. So we've seen a huge uptake in the residential sector. And the residential sector I'm talking about is actually affordable housing. And the government has gone further to actually incentivize by providing land for affordable housing, where you actually make the development green. And when we talk about green, we're not talking about expensive equipment, because I've seen some questions coming in around renewable energy, etc. Before you even get to the renewable energy, it's how you design, how you orientate the building, how you look at natural ventilation before putting air conditioning in, how you size your windows so that you have daylight, so you don't have lights on during the day. So on the basis of social, there's that aspect. And one thing we have to bring into this conversation as well is the cultural aspect. And that's something we're seeing going into COP27, that there's an indigenous cultural opportunity to actually look at how Africans live, how they relate to each other while we're building. So it's not a matter of copy pasting from other places to actually get the solutions we need. And that's adding the aspect on social housing as well.
Absolutely. Godfrey, IFC does a lot of work around affordable housing. Do you have any examples or any specific cases that you've either gone in as IFC or have been working with local financial institutions to particularly try and stimulate this particular area?
Sure, thank you. I think affordable housing, I mean, I would say housing per se looks like a no-brainer when you look at it from a supply-demand perspective, because, you know, people are born every day, you know, housing is needed every day, but you cannot build at that pace. But the other distinguishing factor is that, you know, there is demand and then there is effective demand, you know, in terms of, you know, as much as you have people that don't have housing, how many of those can afford a house? So it then boils down to the details around, you know, the supply and demand equations. Because, I mean, I think the long and short of it is that, you know, whilst housing looks like a no-brainer from a business perspective, it's layered with it has multiple layers of risk, which is why, I mean, it has not been easy to crack the nut. And then on top of that, you're talking affordability. When you talk affordability, it's also about, it also means that this is not I mean, housing is not a high margin business if you're talking affordable housing. So there is always challenges around attracting, you know, equity into these kind of projects. And it can be a strain on the developer in terms of making that provision. But, you know, commercial investors typically, you know, look at high returns for equity. I saw some questions around this, which poses a challenge, I think, when you come to, you know, finding the right investors in this space. But that said, I think the way to go about it is really tackling the challenges that are around, you know, land availability, you know, land affordability, titling, you know, the cost of registration, all those build up to make it unaffordable. As much as you want a cheap house at a certain price, the question is, can you effectively build that house at that cost? And then you add a margin, you know, to then sell it. You find that is quite a challenge, which is why I think with housing, you need, you know, players like the government coming into it as well. I think around providing, you know, resources like land, maybe not necessarily for free, but, you know, maybe a leasehold solutions, because buying land in the open market can be a challenge. I mean, if you look at the cost of land in Nairobi, for example, it really makes the project unbankable right from the word go if you don't have other means of making that sustainable. So, I mean, I think the way that we look at it, I mean, now you asked me about examples that one can cite. I think we realizing that it is important to work with partners like banks, you know, in this space. And for that reason, we're exploring, risk sharing approaches, because I think for banks, the challenge is not liquidity. I mean, it may be in some cases, but the challenge is risk, is the risk. So it's about de-risking them and working with them around, this risk sharing approaches. But then you then need to also be able to address the fact that you need developers that have experience in delivering affordable housing, because that's one of the key challenges. The delivery risk is normally a problem. And then I think by warehousing that through banks, you're able to maybe to reach out to more developers that can then be also supported through advisory programs, training programs to make them more bankable going forward. A case in point is we've invested in IHS International Housing Solutions in South Africa, who really play in the affordable space. And the good thing with them is they're able to work with multiple developers, really at the affordable level. And they have bought into this green, aspect in terms of embracing edge. And when you hear them talk, in some instances, they found that, through adopting green, some of their clients can actually save up to 1 month's rent in a year by, integrating the green aspects on projects. So it is a question of, I think, looking at, the mentality is not about high margins, it's about low margin, but it's a volume business. If you can crack, if you can get the formula right. So, I think it's an ongoing engagement. It needs all players to come to the fore. But just to mention that it's a long haul. One needs all the parties to come together.
Absolutely. And it's a pleasure to have so many different perspectives on this panel, because I think we're covering so many different layers. So, we're talking on one level about multilateral development banks, IFC and others working with banks on that risk sharing to make it easier for banks to get money into projects. We're talking from Elizabeth's perspective as well, bottom up, right? Training, capacity building, making sure that people are ready and able to deliver. Now, we have had a couple of questions from people who are actually developing projects. And, there's a very clear question here, which is, what can they do to attract capital, right? Like, what are actual tangible actions that a developer on the ground in Africa to do to attract either debt financing? And we've also had a question on equity financing, and I know that's been mentioned a couple of times by different speakers. So maybe we can go around the room, the virtual room, and just hear everybody's insights on what can these companies do to be able to prepare themselves as much as possible to be as attractive as possible. I'm going to start with Lena, because you're top of my virtual screen.
All right, that's absolutely fine. Look, there are a few things that can be done, and just off the top of my head, I would say, having the right. When I say sustainability in this instance, I actually mean the sustainability of the, of the property that you are developing, and I mean it's sustainability into the future, and therefore thinking around, the green aspect of things. So how you integrate it from a green perspective. What Elizabeth said is really important about the design is actually really important. I saw one of the questions from an architect, for example, and I think architects can be extremely creative and can get really creative with how they actually kind of come up with these creative ideas around sustainability. Sustainability doesn't only mean put solar panels on your roof. It is also how you design the building, and a lot of efficiencies actually can go into how you design those buildings. So keep that in mind. Keep in mind things like, what would make this a commercially viable development, having the right contracts in place, how the cash flows would work, who is your target going to be, your target renting population in this case. commercial versus residential, I think we spoke about that. So it's also something to kind of take into account, and it will also play a role in who you attract to your, what you need to do in order to attract the right clientele to your property. I think that things, if you know, one of the things that we would look at is transparency. Disclosures, what you are doing and how you're saying you're doing it, but then at the same time also having third-party certifications add to that credibility. I would also think around something really important that's actually quite topical in our space at the moment, and that's adaptation. So adaptation, meaning how do you ensure that your property is going to withstand or your development is going to withstand the effects of climate change that we are already seeing in different parts of the world. So what can you do to ensure, you know, it's not going to sink depending on where you're building it, or it's not gonna get flooded, for example, and get impacted by all of these things. I think you know, the other way I would think about it is you know, what kind, again, I go back to the structures, what kind of structures are out there. One of the things that we have been discussing so far, and I think Elizabeth answered one of the questions with regards to you know, this misconception that green buildings are more expensive or less expensive and all of that. But I think one thing that we need to also focus on is, again, going back to the innovative structures that you can have in place. And one of those things is sustainability linked structures. It's a very simple solution, and yet it doesn't have to link. You don't have to be a fully green certified building, but you could have a development, for example, that you are looking to improve, and you can feature that into your capital structure. So a bank could lend you against an improvement to your development, or a general corporate purposes for that development. But then you can have certain KPIs in place, and then we would measure you on those targets. You get external verifications on them on an annual basis, and if you meet those targets, then you get a reduction in your margin. But equally, if you don't, there's a penalty. So thinking around some of these structures as well is really important. And I would also expand beyond just loans. There are other structures, there are other banking products that could be deployed, that could be more cost efficient, that could be more suitable for the type of financing that you're looking for.
Sorry, I was on mute. A lot of really valuable insight there. Who wants to jump in next? I don't know if I should pass the baton on, or does somebody want to jump in? Bunmi, what from your perspective, what can a developer do to be more attractive to capital, whether it's equity or debt?
On the debt side, because I don't do much on the equity, but on the debt side, I really want to echo one of the comments that Nina made, which is the third-party certification. I think that is what a lot of the, that's what a lot of the African developers fail to realize, that it makes a massive difference for banks to have an independent, or not just banks, any lender, even for the equity side or the debt side, to see that there's been an independent technical advisor looking at this and has certified it. Without that, it becomes very difficult, because I myself, I'm just like an accountant. Originally, I'm a banker now, but I'm no engineer, or I can't say I'm an expert at this or that. So we always rely on independent third-party opinions. But most lenders, most borrowers or developers tend to see this as an, I don't want to say let's say unwanted cost. That's how they see it. To them, is an additional cost which they think they don't need to incur. But actually, that little penny or whatever it is that they're paying, 50,000, 60,000, or whatever the cost is for that certification, makes a massive difference with the banks, with the lenders. The lenders tend to appreciate that. That is one thing that I just want to echo and highlight, because I agree with Lina with all she said, but that is a key point for us that we found to be a problem in most of, which is one of the reasons we tend to reject a lot of projects, to be very honest with you. When the developer refuses or is hesitant, then we tend to say, well, maybe this is not for us.
That's really interesting.
Yeah.
What about
Right.
scale? We haven't really talked about scale at all. So in terms of the size of potential investment, so you know, one of the things, particularly, and I imagine Godfrey, there's something that you come across from an IFC perspective. If an IFC is going to do direct financing into a project, it's got to be a pretty big project, right? So it's not going to be the single residential development, but it's going to be something that's a bit chunkier, whether it's, Elizabeth mentioned before, whether it's a refurbishment effort, so maybe in markets where we've got lots of buildings that need some kind of upgrade, or whether it's the development of a large area. But does scale pay into the attractiveness of a potential investment as well?
Thank you for raising that. I think it's not as straightforward as that, you know, because scale obviously talks to reducing the unit costs, or, you know, these economies of scale, especially around, you know, infrastructure that feeds into the project. But with scale also comes, you know, complications around the capability to deliver at scale. I mean, I think especially if you're talking housing, you know, I remember talking to a developer in South Africa at some point where we're looking at, you know, how do we help you build faster, or even bring in the technology that helps with it. And they said, no, I mean, the problem is not the velocity of building. The issue is the absorptive capacity of the market. So you can build them at the rate that you want, but the question is, does the market have the capacity to absorb the product sustainably? Because I mean, obviously, one way to do this, I mean, which is typical of maybe social housing projects, you build. You know, I remember in Angola, for example, the government went on this huge social housing program where they brought in Chinese contractors. I remember they built this development called Kilamba Kiaxi KK, 20,000 units in 3 years. They built and finished everything, and then, you know, deliver the houses at one go. You can imagine 20,000 houses coming into the market. The impact on the, you know, on the price of the product, the impact on the, are you ready? I mean, actually, when that was done, the government realized that they were not ready to absorb those houses. So they had to come up with kind of rent to own schemes as an afterthought. So I think one aspect to really think about is the market going to be able to absorb those houses? Is there enough offtake? And you also have the potential of crashing the price and actually ending up selling the houses at less than what you build them at. I mean, a case in point, I mean, I'm citing this not because, you know, I'm biased, but just a practical example that, you know, when we started off with IHS, they're going to build these huge schemes. And there are challenges with some, I mean, with them, and then they realize that the way to go about this is build, you know, finite, you know, a digestible project, you know, 500 units, you know, and you obviously, should be a trickle effect into the market so that, you know, obviously the price is maintained, that you also make a return. But if you just dump everything at one go, you can imagine the impact. So that's one thing to be aware of. And I think the reality is that scale is important, especially it gives, you know, a view of the runway, but the way to manage it is to phase out the project. And then it becomes, I think, sustainable in that regard. But then how many developers do we have that can deliver at huge scale? I mean, that's a debatable point. And do we have the offtake? I mean, you have a market like Kenya where, you know, the mortgage market or the book is at 25 to 27,000 units for a population of millions. Is that realistic? I mean, these are things that are real challenges on the ground. So offtake is a big issue. So I believe that, you know, to deliver sustainably on housing, you need to address both supply and demand at the same time. But you also, I think, for developers that need, I mean, in terms of the bankability question, I mean, skin in the game is key. You really also need to, you know, one needs to have a track record, and then you need to understand the market. You know, hence the point that Bunmi mentioned earlier about, you know, an independent market feasibility study gives comfort to a lender, for example. I mean, the location of the project, you know, ETC and off-taker, I think I've already mentioned. But yeah, there's a number of angles that we can, you know, talk about this.
Absolutely. I'm just conscious of time, so we only have 3 minutes left. Clearly, this is a very large topic that cannot be addressed in just 1 hour, but hopefully everyone has had at least the beginnings of lots of interesting and valuable insights and some pretty tangible action items moving forward. Elizabeth, I think I interrupted you before. You wanted to jump in, so I'm going to give you your chance to jump in and then also ask you to also give your closing thoughts in terms of what you think is the one thing that's going to help accelerate funding going into Africa.
Okay, thank you very much for that. I wanted to mention another developer called Buildex. They were looking to build over 10,000 affordable homes. One of them is Zimmer Homes. What they had to do is actually go and negotiate for incentivized mortgages for the people coming to buy. So they had to go and do the extra mile rather than create the product and sit back and wait for people to go and look for mortgages from the banks. They had to go and educate the banks to say, this is going to be a green development. Could you have incentivized finance for the people coming through the door? So that is starting to turn, but it would be good to have the banks coming halfway to say, anyone who's got a green building, we have incentivized finance, and especially on residential mortgages, here's green mortgages, let's go for it. It's already happening in South Africa, so no reason why the rest of Africa can't do that. Parting short, there was a mention about third-party certifications. You know, World Green Building Council and the Green Building Councils really support third-party certifications, similar with Sintali SGS and GBCI for IFC Edge. One of the things on that is that, yes, the banks can actually pay for the certification. If it's very crucial for this third-party review, then the banks can add on that little money onto what is being borrowed, and actually, because it's patient capital. And one of the local banks had agreed to actually look at it that way, because if we put it onto the developer, then we remain where we are with the building market. And last but not least, energy efficiency is the first fuel. So let's look at that. Thank you.
Thanks, Elizabeth. But me, closing thoughts on what we're going to do, or what's the one thing that can help accelerate the funding?
For me, I think what Elizabeth said is partially correct also. The banks can look to tag this on, but I think what to tag on this cost of the technical advisor, so long as the client is happy to take on the technical advisor. To be honest with you, we like, as Godfrey also mentioned, what he alluded to was skin in the game. We need to see the developers with skin in the game. If I'm coming to lend, I don't know, $10 million for whatever number of units, and we're asking the borrower, the developer, to pay for a technical advisor to look at the feasibility study or the certification and what have you, that's going to cost what? I don't know, maybe 100,000 total for all this. And if the client refuses, it already gives me a feeling that something might not be right. That's why we tend to think, oh, maybe there is something they don't want us to discover, and lenders would generally tend to shy away from that. Having said that, we have done it where we've included this cost in the facility agreement, where the borrower doesn't pay for it upfront, but tends to pay for it partially over the life of the facility. You can also do that to spare because not every single developer is cash rich. So we understand that, but we do want to see the skin in the game, and that is very important for us.
Super interesting. Godfrey, last comments?
I think, I mean, the future is bright in terms of, I think, green financing in the end, because nature is actually forcing everyone to come to the table and realize that it's not an option to build green. And like I said earlier, for us, whatever investment we do in real estate, it has to be green. So, I mean, that's also one of the, I think there's convergence and a realization by everyone that this is not, an option, but the way to do business going into the future. So I think there is, a lot of promise around this. We'll be talking and maybe doing bigger numbers in the future, but there's still finite financing out there. So we need more parties to come to the table. Thanks.
Thank you, Godfrey. Lena, last comments to close the webinar. No pressure.
So I think maybe better collaboration between the private and public sector in order for us to kind of mobilize capital more efficiently. And by more efficiently, I mean looking at the space of blended finance and how can we mobilize more private capital for every $1 of public capital in order to maximize the benefit of spreading the capital to where it matters most.
Thank you, everybody, so much for your time and your valuable insights. I know we got lots and lots of questions which we didn't get through, but we'll see if we can try and get them answered afterwards. Thank you to everybody who participated. I hope you have a great rest of your day, and we'll be sure to share the recording in the next couple of days. So you can always watch back and see lots of this valuable insight to help you better access finance for your projects. Thank you all.
Thank you. Cheers.
Thank you.